Hello everybody, this is Sabyasachi Paul from Eastern Finances Limited. Now in my previous discussion, I was talking about why I was positive on banks going ahead. And I think one bank which I'm particularly positive on at current prices would be HDFC Bank at around 1460 rupees. And one prime reason for this is in the last 6 months, this bank has really underperformed the index and has not really moved up in line with the index. And I mean, in comparison to the other peers, other banks, which has seen a very good movement in the last 3 months. So I think HDFC Bank, they reported very good, strong credit growth of 22% YOY and 2% quarter on quarter in Q1 FY23, driven by a strong growth in their retail book. And even within retail, the pace of the mortgage portfolio acquisition from HDFC Limited should remain high, while organic growth in unsecured loans should also remain strong, with the underlying consumption trend remaining robust, given the way the economy is opening up post pandemic, and we are actually seeing very good growth as far as economic activity is concerned. So the bank has clarified, that the RBI has given in principle approval to its merger with HDFC Limited. But I think we should remain a bit cautious on this point, because there is still some lack of clarity regarding regulatory forbearance as far as the stake or the subsidization of its subsidiaries like HDFC Life and HDB Financial, amongst some of its subsidiaries are concerned. So I think that will remain a overhang in the near term. So amongst other things, I think in Q1 FY23, slippages were on the higher side, but this was again mainly due to seasonal reasons because of higher agri NPAs and some lumpy corporate NPAs of around 400 odd crores, which were recognized by other banks as well. So, but I think going ahead, the overall stress levels in SME and retail segment should be coming down, and this should lead to lower NPAs going forward. So, I think going ahead, we believe that better credit growth, better net interest margins, and a pickup in fees income, will lead to steady improvement in core profitability as far as HDFC Bank is concerned. And if we see that the bank commands a market leadership position in terms of both credit and deposits, and has the best in class asset quality, which highlights its strong underwriting capabilities. I mean, if you just try and compare it with its peers, it has one of the best asset qualities in the banking system. And I think going ahead, the company is also talking about aggressive branch expansion. And if we see the merger with HDFC Limited, as and when it happens, we will see a very strong branch expansion happening, which should also augur well as for the company, I feel. Now, as far as valuations are concerned, the stock currently trades at a reasonable valuation of just around 2.3 to 2.4 times the FY24 expected adjusted book value, which is significantly below its historical average. Now, during the last 13 years, HDFC Bank's highest Price to book ratio has been around 4.9%, while on the lower side it's been about 2.4%, and on an average it's been around 3.7%. So I think, given its historical trend, historical average, I think, we recommend a buy on the stock with a target price of 1800 rupees, valuing the core bank at around 3 times FY24 expected adjusted book value, and we value the subsidiaries at around rupees 75 rupees per share. So if you like my videos, I would request you to share and subscribe for better reach. Thank you.